the head of equity research at Aditya Birla Money. Vivek, always a pleasure chatting with you. Thanks so much for joining us here on ET Now. It's expiry day. If I just look at what's happened in the markets, not just in the run-up to verdict day, but even post 23rd May, I'm sure you've all had a very tough time figuring out what to do, how to stay ahead of the curve. It's not been easy at all. The markets have literally been on an up move and some consolidation. Do you think more up move is, there's more elbow room for an up move?
Definitely, we remain constructive as far as the market is concerned. As far as this election victory is concerned, BJP converted the strong mandate. That is, it turned the Black Swan event of 2014 into a new normal. This strong victory has got very important implications. We believe they will be in a position to take forward bolder and tougher reforms. They will be targeting multiple areas at the same time. Yes, there is some degree of slowdown as far as the economy is concerned. So they will be targeting at elevating the rural stress, or for that matter, trying to boost the consumption, which is showing signs of some slowdown of late. We believe that BJP manifesto of $1.4 trillion investment in infrastructure is likely to play out in NDA 2. That should be a very big boost because that creates jobs at the bottom of the pyramid. Financial sector reforms could be taken up in a really serious way at this point of time. They will be trying to fire up SEZs. Maybe FDI, recent data says that FDI, there is a slowdown for the first time in 6 years. So you could be seeing something on the FDI front, or maybe divestment could be taken up more seriously. 24 PSUs, they have already been cleared by the cabinet for divestment. Some could be sold totally. So the government will be attacking multiple areas at the same time. We remain positive. The focus of the government is going to be growth. There were speed breakers over last 3 years in form of demonetization, GST, or for that matter, the sudden Black Swan event that we had in our own market by way of ILFS. So all these speed breakers should be behind, and we believe next 5 years will belong to growth.
Okay, you've named of all of this, but we've seen a lot of action when it comes to the bank Nifty tool. Clearly a lot of expectations there. It has been talked about that the first order of business when we look at the economy has to do with the NBFC space. Fix it once and for all. INFS, look what's happening with the domino impact as well. So given that, how are folks like you approaching the banking stocks in the financial sector at large?
Definitely, in case the economy has to perform, banking will continue to outperform, or you could be seeing a growth of something like 1.5 to 2 times the GDP growth. But there again, there are some strong franchises and there are some strugglers as far as that space is concerned. We believe PSU, while the government has been putting in a lot of effort to address the concerns over there, but the challenges as far as PSU is concerned remains. Private sector banks have been growing at a rate much faster, and they will benefit from the shift of market share from PSU to private sector banks. There we continue to stick with frontline large cap companies, that is SDFC Bank, Kotak Bank. NBFC is definitely seeing a lot of challenges as well over the last 6 months. There again, we are sticking with the frontline companies. So while Bajaj Capital has, Bajaj Finance has run up significantly, we believe they will continue to outperform in the marketplace, both on the lending front and also on the performance front. So while the stock may be cheap, it will keep on becoming expensive by the day. So we are focusing on only frontline quality plays as far as banks and NBFCs are concerned.
Okay, Vivek, let's leave it at that. Always a pleasure chatting with you. Thanks so much for joining us here, and look forward to keep getting you back on Market.